In this video, we are going to talk about Alphabet stock analysis. So before starting this video, please like this video and subscribe to our channel for the future updates. Let's start. It's still early in 2021. But will this be the year that Google stock finally outperforms other FANG stocks? Alphabet, Google, has held up better than other big cap tech stocks. Investors seem to like the fourth quarter earnings and 2021 outlook of Google stock more than Facebook, FB, Amazon.com, AMZN, and Netflix, NFLX. GOOGL's year-to-date share performance, both absolute and relative to the S&P 500, hasn't been this strong since 2009, JP Morgan analyst Doug Anmuth said in a recent note to clients. Google stock recently joined the IBD leaderboard. The leaderboard is IBD's curated list of leading stocks that stand out on technical and fundamental metrics. Google stock bulls trumpet a rebound in digital advertising as COVID-19 vaccinations expand, boosting global economies as industries normalize. India, Brazil and some European countries continue to struggle though. Google stock. New $50 billion buyback authorized. Google earnings for the first quarter handily beat analyst estimates, including a $4.8 billion investment gain. Internet search advertising and YouTube advertising revenue topped expectations in the March quarter, sparking a rally in Google stock. Alphabet also announced a new $50 billion Google stock buyback. Under new Alphabet chief executive Sundar Pichai, Google has improved transparency. In its fourth quarter earnings report, Google disclosed that its fast-growing cloud computing business is unprofitable despite high investments. Still, cloud computing operating margins are projected to increase. Meanwhile, Google stock's earnings have been boosted by an ongoing stock repurchase program. Google spent $7.9 billion on its own stock in the fourth quarter. In the September quarter, it spent $7.9 billion, and in the June quarter, it spent $6.9 billion. A stock buyback authorization granted by Google has around $15.4 billion left. Google stock. U.S. Supreme Court rules against Oracle. The stock of Google hit an all-time high on April 5 following the release of the U.S. in a copyright dispute concerning Android mobile apps. The Supreme Court ruled in favor of Alphabet. Bears on Google stock, on the other hand, point to tighter control. On October 20, the Department of Justice filed an antitrust complaint against Google. Through monopolizing internet search and search-related advertisements, the Justice Department claims that Google has hurt competition and consumers. Google stock has escaped 3 antitrust fines totaling $9.3 billion imposed by the European Union due to its large cash reserves. If it wins in court, the Justice Department, on the other hand, may compel Google to restructure. According to some experts, if Google is split up, the stock will be worth more. A court case is expected to last years. With the exception of Waymo, we do not foresee a split of major assets or a breakup in the next few years, Anmuth said. In addition, Congress can rewrite Section 230 of the Communications Decency Act in order to rein in internet behemoths. The legislation protects web publishers from third-party content liability. Even though the internet search giant reorganized as holding company Alphabet in 2015, most investors still know it as Google. Google's main internet advertising division was split from so-called moonshots, such as autonomous vehicles and the Verily Life Sciences unit, as a result of the reorganization. Loon, Google's internet balloon project, has been shut down as a cost-cutting measure. Digital ads, the Google Cloud Platform, YouTube, and consumer hardware devices all benefit from Google stock's artificial intelligence strength. Google is one artificial intelligence stock to keep an eye on. Google stock. Advertising core business. Though Google has advanced into cloud computing and consumer hardware, its primary source of revenue remains digital ads. In early March, Google revealed that it would no longer use web browser monitoring technology to sell ads. Google had previously stated that third-party cookies would be phased out. Google intends to use contextual technology, which allows marketers to target aggregated groups of customers that share common interests such as travel, sports, or fashion. According to a study from market analysis company eMarketer, Amazon is stealing market share from Google in internet search-related advertisements. With Amazon gaining traction in digital ads, Google changed the way it manages e-commerce listings in 2020. Google co-founder Larry Page stepped down as Alphabet's CEO in December 2019, and Pichai, who led the Google unit, took his place. Sergey Brin, a co-founder of Google, has resigned as Alphabet's president. Despite high investments in data centers for cloud computing, artificial intelligence, YouTube, and consumer products, Google's profit margins remain an issue. Google updated its accounting practices in early 2018. It began reporting earnings in accordance with GAAP, or Generally Accepted Accounting Principles. Stock-based compensation is included in GAAP earnings. Meanwhile, Google has been battling Amazon and Microsoft for market share in cloud computing services, MSFT. YouTube's subscription business, according to Bank of America, will generate $18 billion in revenue by 2025, up from $5 billion in 2020. Furthermore, as major brands shift their ad budgets from linear TV to digital channels, YouTube benefits. According to Google's September quarter earnings call, YouTube has over 30 million music and premium paying subscribers, and YouTube TV has over 3 million subscribers. Google stock. Fundamental analysis. Google's earnings under widely accepted accounting standards, or GAAP, increased 166% to $26.29 per share in the March quarter, including $4.8 billion in investment gains. Gross sales increased by 34% to $55.31 billion, excluding traffic acquisition costs. Net revenue was $45.6 billion, compared to $42.36 billion anticipated, according to the company. Alphabet spent $11.39 billion on stock repurchases, up from $8.5 billion the year before. Internet search and other sales increased by 30% to $31.88 billion, compared to $29.8 billion anticipated. Google reported a 46% increase in cloud storage revenue to $4.05 billion, compared to $4.07 billion anticipated. YouTube ad sales increased by 49% to $6.01 billion, exceeding expectations of $5.66 billion. Costs of traffic acquisition increased 30% to $9.71 billion, compared to $9.25 billion anticipated. TAC has risen as Google's reliance on Apple, AAPL, affiliate pages, and third-party applications for mobile advertisement revenue has increased. Waymo autonomous vehicle business. How much should self-driving car project Waymo and other bets, like the Verily Life Sciences unit, be factored into valuation is a crucial question for investors. Some analysts estimated Waymo's long-term value to be between $75 billion and $125 billion in early 2018. Expectations for self-driving cars, on the other hand, have recently been reduced. Waymo received $2.25 billion in funding from outside investors in early March, including Silver Lake Partners, the Canada Pension Plan Investment Board, and Mubadala Investment Corporation of Abu Dhabi. Though Waymo's value was not disclosed during the funding round, rumors suggested it was only $30 billion. Waymo CEO John Krafcik, who had been in charge of the autonomous vehicle division since 2015, resigned in early April. He will be succeeded by two co-CEOs, Tekidra Mawakana and Dmitry Dolgov, according to Alphabet. Waymo's chief operating officer was Mawakana, and its chief technology officer was Dolgov. Google stock. Pixel 5G mobile phones. The efficiency of Google's hardware division is also a concern. In tablets, it's up against Apple, and in smart home gadgets, it's up against Amazon. Google released new Pixel smartphones in September that support 5G wireless services. Apple released 5G iPhones on October 13. The Play Store's sales growth continues to be a bright spot, thanks to the Android smartphone operating system being integrated into smartphones sold all over the world. Apple and Google's app subscription rates, on the other hand, are subject to further regulatory scrutiny. Furthermore, Stadia, Google's latest cloud gaming service, debuted in late 2019. Stadia, on the other hand, has reduced its game development spending. In addition, Google agreed to purchase Fitbit for $2.1 billion in late 2029. Analysts believe the acquisition would aid Google's entry into the health and fitness industry. On January 14, the Fitbit contract was finalized. Google stock. Technical analysis. Meanwhile, Google's cloud computing market lags behind Amazon and Microsoft. To improve performance in the corporate market, Google hired Thomas Kurian, a former Oracle, ORCL, executive. Google Cloud Platform, according to Bulls, is gaining traction as it focuses on security, open-source software, and data analytics. In June of this year, Google paid $2.6 billion in cash for data analytics firm Looker. Looker's analytics platform uses business intelligence and data visualization software and is headquartered in Santa Cruz, California. Analysts predict that further acquisitions to improve Google's cloud business will follow. According to IBD Stock Checkup, Google's relative strength rating is 75 out of a possible 99. Stocks with an RS rating of 80 or higher are considered to be the highest. However, as of April 19, Google's relative strength rating outperformed Facebook, Amazon, Netflix, and Apple. Google stock. Is it a buy now? Furthermore, Google stock has a B+ accumulation distribution rating. This ranking is based on a stock's price and volume adjustments over the previous 13 weeks of trading. On a scale of A+ to E, the rating assesses institutional buying and selling in a stock. High institutional buying is denoted by an A+, while heavy selling is denoted by an E. Consider the C grade to be neutral. According to IBD MarketSmith, Google stock formed a flat base in early 2021, with an entry point of 2,145.24. On April 5, Google stock broke out of its flat base in heavy trading. A 5% buy zone stretches all the way to 2,250. Google stock has risen above the 5% buy zone as a result of the rally following March quarter results. Investors may either wait for a dip in Google stock or create a new entry point. Some contend that Google stock has passed its heyday, as it earned nearly 800% in just over 3 years after its initial public offering. In recent years, Google stock has largely followed the S&P 500 index, with occasional outliers. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.